Let's look at the document that's used to record transactions in the general journal, which is a memo. So they're used for internal transactions, which are basically transactions that don't involve another business or individual entity. So the main source documents simply aren't suitable for recording these sorts of transactions. For example, if the business received cash, that would be a receipt, which would go in the cash receipts journal. If the business paid any cash, that would be a check butt, which would go in the cash payments journal. If there was a credit sale, that would be a sales invoice in the sales journal. And if there was a credit purchase of stock, that would be a purchase invoice in the purchases journal. But for example, if the owner contributed a non-cash item to the business, e.g. a vehicle, that's simply not any cash received, any cash paid, a credit sale, or a credit purchase of stock. So none of those documents there are any good, so we won't be able to use them. Likewise, if the owner takes out something that's not cash, e.g. stock, they take out stock as a gift for a friend, there's no cash received or paid, no credit sale or credit purchase of stock being made, so none of those documents will be suitable. What if there's theft? Obviously there's no other party, the person's stolen from us, so we can't issue any sort of document. So no cash received or paid, no credit sale, and no credit purchase of stock. So what we need is, when our transaction doesn't involve any of the following situations on the screen there, we have an other. If it's in any other transaction, we're going to need to use a document called a memo, and that'll get recorded in the general journal. So how is it set out? We have the name of the business up the top, so TGS Clothing there. We have the date. Each memo should have a unique memo number. It should have the details of what happened. So in this case, it says the owner withdrew one jacket, so this will be drawings for personal use. And we have an amount, which in this case was $250. Why do we use memos? Going back to chapter 3, it's all about reliability. We want things to be free of opinions and estimates. Why? Or how? So we can verify it, and we verify it with source documents. And in this case, we need the source document called a memo. In this case, we're going to need memos in the general journal for the following situations in chapter 7. The owner starts a new business. Situation 2, the owner converts a single entry accounting system to a double entry accounting system. Situation 3, the owner makes a capital contribution or takes drawings that aren't cash. So it could be a vehicle, computer, stock, that sort of thing. Situation 4, the business donates stock for advertising purposes. Situation 5, a debtor is declared bankrupt and is written off as a bad debt. And lastly, situation 6, where we need to correct an error previously made in the firm's accounts. So there are the 6 situations we need to do for chapter 7, and we'll start with situation 1 in the next video.